What's up, everybody? Get started in a minute. Get myself situated. How's everybody doing? How's the sound? Background noise and mic. As I said in the previous streams, I think that this question is no longer necessary because this Shure mic is top of the line. I know some of you guys said last week, or the other day rather, that there's a slight buzzing. I could actually hear that if I'm on my iPhone, but it is very subtle. Sound is good. Cool. Let's make some moves. All right, what's going on, guys? How are you? Gotta remember the camera's up there, but I have a poor habit of not addressing the camera. Not like it matters, but I have the webcam on today. I am growing the beard out, getting a head start on No Shave November. Now, little backstory, I never shave. I haven't had a boss in years, so I haven't had reason to shave. You know, there's times when I clean up more than others, but I haven't shaved my entire facial hair off in, I can't recall how long. I know I've done it maybe once or twice in the last 7 years. And that's because when I do it, my wife freaks out. Because as you can imagine, this is very much me now. So not having facial hair, it's like I've taken armor off that I haven't taken off in who knows how long. And that's exactly what facial hair is. It's facial armor. And it's great. It's great. It's great weather protection and insulation. So when you have a beard for a really long time and you get rid of it, it feels really fucking weird. So, okay. Hopefully everyone's doing well. Let me just post that I'm live now. And we'll get started. It's Wednesday. Wednesday crypto lunch. 12:32 Eastern Standard Time. I'm based out of New York. I don't know where you guys are, but I hope you guys are doing well. I'm going to give it a minute or two, and then we'll get started. I see some familiar people in the chat. Killa, Dev, Ellen89, what's going on? Ronan, AO, Tom, what's up, Samurai? Shremlin. Quick question right off the bat that I'll get into as soon as we get the intro pleasantries out of the way. But we'll get started in a minute. Make sure that we have an adequate amount of people in here. Go ahead and hit the like button. Hit the subscribe button. What was I going to say? I was going to say something before that. Doesn't really matter. This is a new channel, so if you're not subscribed to this one and you're subscribed to Block Roots, make sure you subscribe to this one as well. My partner, Rager, so Josh Rager, I think he's going to be putting out a new piece of content on the Block Roots channel today, too. So that'll probably be pre-recorded, and make sure that you take a look at that, because Josh hasn't done content in a really long time, but Josh does a really good job of conveying whatever kind of content or information he is addressing. Cool. All right. Okay. Formalities out of the way. None of this is financial advice, strictly for entertainment purposes only. You should know that by now. I know that it's unrealistic to say something like that. You guys are watching a stream that is being done by someone who's a trader. I've been trading now for going on 2 decades. I've been trading the crypto market for going on 7 years, going on 6 years, 6 or 7 years. Either way, it's the primary market that I've been trading for the last 6 years. I've had thoughts about going back and trading the ES and trading crude oil, but that always usually comes around a time when volatility is drying up in crypto. And if anything, that's a pretty good sign that maybe we're looking at some expansion. You know, you get to a point where you're twiddling your thumbs long enough and the ES is moving, the S&P is moving, you know, legacy index futures are moving, other assets are moving besides crypto, and you get bored and you want to jump ship. But But what was I going to say? This is a trading stream, right? So I imagine a lot of you guys do look to this for some direction. But again, I don't want you to just follow me. You know, I give ideas and I change my mind quite frequently, and it would be very difficult for you to keep up with that. It already is difficult enough for people to keep up with my Twitter, which does change bias quite frequently. You know, I change bias when it's time to change bias. Sometimes I'm right, sometimes I'm wrong. I feel like more often than not I'm right, and if anything, it's worked for me, and that's the most important thing. It's worked for me. It's not a method that is tailored to you. So that being said, take responsibility for your own shit. That's important in every single aspect of your life. And last but not least, formalities aside, thanks to Phemex, right? Shout out to Phemex. You can see I'm not really good at this, saying things like introducing sponsors and all that. But shout out to Phemex. I've been working with Phemex. Rager's been working with Phemex now for a really long time. Been partners with them since the beginning. So, you know, we haven't jumped around from exchange to exchange. You see a lot of people like hopping around from, you know, Reflink to Reflink, Delta to Prime XBT to Bybit. We haven't done that. So we really like the team. It's really important to us that the people operating exchange have integrity, that we get along with them, that we trust them, and we go off of that instinct. And it's been a phenomenal exchange. They offer a great product. If you want to sign up, the link is below. If you don't want to sign up, that's on you, right? Trade anywhere you want. I've traded on almost all exchanges, and I still consistently make sure that I'm spread out. So if that's any indication of how you should be in crypto, then if that's not, then I don't know what is. But the link is below. The link does give you access to a $3,300 sign-up bonus. One cool thing that I just want to get this out of the way, because I hate shilling or do anything like that. Like I said, this is all on you. The cool thing about Phemex, which you could imagine a lot of exchanges are probably going to do, is that they actually are doing prediction markets now. So trading is difficult, right? A lot of people have trouble trading, but they might be actually somewhat decent, and this is going to sound kind of contradictory. They might be somewhat decent at actually determining roughly where something's going to be a week from now. Is it going to be up or is it going to be down? I'm trying to keep it as binary as possible because that's what prediction markets are. So they have now prediction markets. It's going to be for more things than just price, because obviously there's assets to trade around. They're going to have it for interest rate decisions, the elections, you know, sports outcomes. So I think it's really cool, because I think that's, I think over the last like 10 years, markets have been really gamified. And I think that that's only going to continue to persist. And you know, someone who shares that sentiment is GCR. And you guys usually look to him as some kind of signal. And, you know, I think we both share the same opinion with the gamification of markets and where things are headed and how it's all one big casino. And I don't think the game is over. I think it's kind of in the earlier innings, but there's obviously a lot of, you know, growing pains that we have to go through. Okay, so we got all that out of the way. If you're just tuning in right now, make sure you subscribe. Make sure you hit the like button, and we'll get it started. I don't want to cover like the same shit that we always cover in every stream. I'm getting kind of bored of streaming again, and I say this quite frequently. I don't really like streaming too much. I don't know why. Sometimes I'm like in the mood. Sometimes I'm not. When I'm not, I think it's really obvious. Like, it's like I haven't done my homework. I'm not really into it. You know, I don't have bullet points. I'm kind of riffing. But I do want to be a valuable source for you guys. So the thing that I usually get hung up on in the beginning is like talking about the macro over and over again, like touching on the shit that we're all aware of. You're all aware of how the market's moving right now. It's all one big trade. I don't care what anybody says. Finally, everyone has gotten on board with what only a few people have been privy to for around a year plus now. It's just the markets are very correlated. That's the direction we're going. Only during a bull market are we going to see periods where things are more loose and you have more idiosyncratic behavior. Otherwise, we're correlated, right? Everything is one trade. And when I say it's one trade right now, it's rates. So if you pay attention to lower time frame price action, you've noticed that for a really long time now, the S&P, whether you're looking at, regardless if it's the S&P, another index like the Russell, the NASDAQ, and between those and crypto majors, right? You're going to be looser the further out you go in terms of beta, between like the S&P and Bitcoin, they're like the same thing, right? If you're trading BTC, you're trading the S&P. Now, like I said, recently there's been brief periods of idiosyncratic behavior. There's been outperformance overall. So, what I mean by that is Bitcoin has been moving we would say still kind of not tick for tick necessarily, but closely resembling lower time frame price action of equity indices. And I'm just going to say ES from now on, right? Equity index future, the E-mini S&P. But what's happened recently is actually there's been less downside capture. So while the S&P has continued to make, slightly lower lows, and I'm just imagine lower time frame price action, S&P is making slightly lower lows. In cases like this, more recently, BTC has, stayed relatively flat. So it hasn't had as much downside capture, and that'd be a great asset profile if Bitcoin is going to remain that would be attractive if it remained like that, right? If Bitcoin continued to have less downside capture and more upside capture. Normally when something is higher beta, it means it's going to have more downside capture, more upside capture. But if you want the upside, you have to be willing to weather the downside. So if you just consider like a beta of 2 and the index or the benchmark is a beta of 1, very quick math, not exactly precise, but let's say, the S&P moves up 1%, BTC moves up 2%, right? And then the inverse happens to the downside. There's a lot of times though where highly volatile assets, assets further out the risk curve are much more volatile to the downside. So you'll have more downside capture. So the S&P moves down 1%, BTC moves down 3%. So we've seen that negative relationship abate in the last, I looked at it recently. And I didn't even realize how long it's been going on. It's over a month now, right? So, first quarter, or into the third quarter, maybe the entire third quarter, I can't recall. But Bitcoin has been outperforming. I don't know why, right? Maybe we've shaken out the legacy desks that were trading this correlation or trading Bitcoin as, proxy around the S&P or around macro. I don't know exactly why, but all I know is that it is, and that's really the only thing that matters. I'm not really worried about the why as much as I'm worried about the what. So rates up, BTC down, index down, rates down, dollar down, BTC up, index up. So you could see this morning there's been like this back and forth behavior. And if you looked, if we're looking at the S&P, if you looked at rates, if you looked at the 2-year, if you looked at the 10-year, if you looked at the dollar, they're moving up. Last quick macro point that is relevant. What was it? Crude oil. So I believe there's been a cut around 2 million barrels a day, whether that's like for geopolitical bullshit reasons or slowing growth. I don't know. They want to keep the price of oil high. I don't know. But the point is, with that cut, with less supply obviously coming into the market, being produced, we saw a quick spike in the price of oil. Not obviously necessarily a good thing when you're talking about the economy, when you're talking about, inflation. So just be careful out there. That's all I could say. I mean, it's a very headline-driven market, very news-driven market. Like you're a day away from a catalyst that completely wipes out whatever behavior took place the week prior. So I wouldn't marry anything, playing level to level. And that being said, the chart that you're looking at right now, this is my Sierra chart for BTC. This is broken off on one screen. It's next to a ladder, and then it's next to the Crypto Watch tapes, which are filtered. You can't see the two columns to the right, which actually have large orders. But I'm going to switch screens real quick. This is in the event that we have a tradable opportunity, which might be setting up right now. I don't know if I would necessarily want to buy this diagonal to the top of what is probably the POC of today, but we'll get into that in a second. I'm willing to let that one sort of swim by. Switch this up. Okay. Switch it over to Sierra. Let me just make some adjustments. What's up to everybody in the chat? What's up, Banga? Long time, buddy. Okay, so this is the S&P. Let me clean this up so you could see everything because I have it kind of broken down right now the way that I would have it on my screen. All right, so I have a couple things that you're going to see, and I'm just going to tell you what they are real quick. There's this like running diagonal right now on the TPO. So if you guys remember the last stream, a couple days weren't loading, and I was looking for what I was doing was in the last stream, I'm going between the TPO chart, I think it was, and the daily, and I'm like trying to connect what I'm talking about with what's on the daily, and I was having trouble with figuring out where this particular gap was, and then I thought that I was completely losing my mind. Happened to be that a couple days weren't loaded, and I'm trying to draw this trend line to show you guys sort of how things are compressing and where a potential breakout is. So I have a TPO for the daily, a weekly. I have a daily chart. I have my 30-minute chart, high time frame footprint, low time frame footprint. So I actually just recently closed out a long before the stream started. I'd shared a post on Twitter about the single print area, the gap. So recovery of that, I was long for about 130 points. But first things first, this line right here, just to clarify what that is, you're going to see that one, this is just this is a local line. So we're broken out of that right now. I would have wanted, so I had this line drawn before we had the breakdown. We were looking at basically a flag in progress before this breakdown. I had hedged. I'll go into why I hedged again yesterday. I kind of got shaken off my optimistic perch that I was on because we were under this sort of 20,400, 20,500 region. I'm going to go into that again. But before we broke down, I was looking at this sort of running diagonal thinking that might be a good level to get behind a momentum trade with. So if we had broken at the time like 20,200 earlier this morning, I would think that kind of expansion sideways, lack of momentum down, expansion sideways, expansion upward would have led to at least testing the underside of the structure again and maybe yesterday's high. Now that we've broken down and tested this gap and we're back above this level, I don't know if I'd necessarily want to buy into this kind of break. I think that we're really close to an area that is still, it still deserves respect as far as a high time frame resistance or what I expect to be resistance. And until that breaks, I'm not looking to get long again. So I originally got long down here. And if I just show you where that took place. So we had this gap from the TPO. So inefficient structure, break out of this was a multi-week value area. We had 2 days of a ton of compression over the weekend, broke out of that structure, held the structure. I'd said last stream 19,005 to 19,006 would be the area to look for some kind of acceptance to develop for a move up to 20,200. So that was a damn good trade actually. But we left behind this inefficiency, which we tagged. So this is the first area that I'd be looking, before this took place, this was the first area that I'd be looking for some kind of retest. This is not an area you want to blindly short into. It's an inefficiency, and normally you see price kind of lick into this level and then somewhat recover. So where we sit right now, we're under today's point of control. It's a little top heavy up here. Now we're, starting to reclaim it. That's great, but we're still under this 20,004, 20,005 level. Let me just show you what that is. So this is the weekly TPO, and these are combined profiles. When you're in between two large areas of value in some dead space, I usually trade in the direction of wherever we broke from into the direction of either another low volume node or another high volume node. All right, so that sounds kind of weird because it's like I just labeled the only two options you have, but if we have a high volume node ahead of us and we're in a low volume node, I'm kind of looking at that high volume node as the next target. Right now, this is the first time. Let me open this to make it a little bit more clear. Undo all merges. Broken outside of this last 2 week range, but this is an area where I would expect things to potentially get cut off, this kind of gap and untested positioning. So the threshold for that is right around, and it's always a loose level for me. It's like 20,005, 20,006. If we see acceptance into this region, then I would look to long, right? Look to long with ultimately a target of around 21,004, 21,005. I usually front run. But that's if we get acceptance, right? So acceptance would mean we're able to break above this 20,005 level, see it get sold into, and see that buyers are still, remaining firm about lifting out of this level, right? So we don't see the bid dry up. We don't see, an immediate response by sellers. If anything, if we do have selling that comes in once we retap this high, price is still able to remain bid. So I would have gotten in earlier if we didn't have this breakdown for some kind of break of what we have right here, which the diagonal doesn't sit normally when you have the TPO chart on. But I'm not willing to really long this right now with that same target of this level. If it happens to go there, that's great, but it's possible that we just put in some kind of lower high and that this is, some kind of squeeze after what looked like a pretty nasty breakdown this morning. real quick, local levels, just to show you what that looked like on the daily. That low volume region on the weekly chart is right here. This is what I was having trouble with last stream. That low volume level is right here. So 20,005, 20,006 up to 21,005. I said I would take profit 21,004. It's just force a habit for me to take profit early. Then this opens up, I think, a whole other trade, right? You know, we haven't really seen us be able to reclaim any kind of really low volume, untested, larger move down. So if we're able to reaccept back within this structure and break outside of, it's not that end. It would be that case because we've moved sideways long enough. So if we're able to break above, let's say 20,005, 20,006, I think there is a really good tradable opportunity that's to the other extreme. So up to, we'll say 21,005, right? But if price holds this level on the high time frame, you have had a pretty significant shift in market structure, I think, at least locally, to say that maybe this has, much further to go. I'm still playing it like level by level. But if we're a day outside of this or 2 days outside of this and prices, retested this level and then is moving sideways, just to put in perspective, that means that we are able to, for the first time in some time, break outside of a very tight, compressed consolidation and put in some kind of higher low. This entire structure, you could see that it looked briefly like we had that right here. We had to move to the other side of this extreme and then failed. So any kind of move that's outside of this level now, so accepts into this gap, again, you have the short-term opportunity from here to here. But if you have a high time frame close, high time frame strength outside of this level, I think that the fact that we've done this for so long and that this has governed our progress more recently, I think that we have a longer-term trade at that point back up to the range highs. And I'll switch the chart real quick just to show you the high time frame. I think as far as that goes, acceptance, high time frame acceptance in this level, sort of like back inside of this composite, takes us back up to the range highs, but I would probably look at right around this naked point of control as a possible take profit level. So around 2,400, because that has been so far untested. Is this all clear? But like I said, so this is I don't know how that happened. I gotta remember my drawing tools get all fucked up when I use my screen drawing tools with the Sierra drawing tool hotkeys. So this is the level, honestly. We have kind of an inside day forming, 20,500 and above. I think that has some legs, especially after this rejection and how clean this level is. Or, right, in terms of a further breakdown, don't know if I would want to buy necessarily a test back here down around 19.7. So unless we find support around 19.6, I think that what you do is you probably just break back within this range, retest this naked point of control around 19.2, and then you're in much more trouble, right? So if this fails, the next area of business or tradable opportunity, in my opinion, would be from 19.6, 19.5 to 19.2 to 18.8. I think in general, if this fails now, right? So let's say that this is kind of just a throwback, and then we get a kind of a lower high here. I think that if we fail and start falling back below this structure and we're going to aim back towards this low, I think you just want to trade in the direction of that flow. So from 19.6 down, I should say. I think it's obviously very clear if you're breaking back down below this low. But from 19.6 down, if we don't find acceptance, testing this extreme even further, so maybe we do wick into this and have more development. But if we're under 19.6 and you're not seeing any kind of significant response by the bulls, I think you just want to start trading back in the direction of this flow down. And this is why I was willing to rehedge up here. very hesitant of, getting very bullish with everybody else, because it seems like everyone has suddenly just decided that yes, markets are going to recover in drastic fashion. I think that we have a CPI ahead of us obviously next week, and we have non-farm payroll this Friday. So I think it's kind of dangerous to get swept up in the emotion right now. So I think Bitcoin should be pretty clear. So one of you guys asked a question about TPO. There's plenty of free information. Some great books that almost every trader who uses Market Profile has are by James Dalton, and that's Markets in Profile. And there's another great book. I made a book list. I shared it on Twitter. Just Google, Twitter search my name and then book list. Yeah, I would start with James Dalton's books. Market Profile, TA, all it's doing is Market Profile. The benefit of Profile is, one, it's giving you an idea of what the underlying distribution of price is. So you're beginning to see where price is more accepted, where it's more clearly rejected, where people like to do business. I don't use it as like an indicator or strategy. It's just a tool to help me identify where I want to get involved, where I might want to get involved. And I think TA is the same thing. Like, where people get it wrong with TA is thinking that it's like prescriptive or predictive. Everyone's TA method, everyone using different TA is, in my opinion, TA is useful for, one, defining risk, especially if you're identifying key areas of market structure. And two, everyone's TA is really a way of identifying where they might want to look to get involved. So whether it's based on some kind of dynamic support and resistance, if you're using moving averages or prices relation to moving averages, whether prices have gotten very extended above or below, whether you're using, daily and weekly levels to identify, areas where people participation might pick up. It's not that TA is, predictive. It's very descriptive, right? But it is a way of just filtering possible opportunities. And the more significant the level is, the more obvious it is. You could assume the more people are going to get involved. So there's really great opportunities where there's a ton of liquidity, right? Where there's going to be a very significant exchange of positioning. That's why key levels on the daily, on the weekly, that's why it's almost always great to fade them the first go around, because it's going to be the first response by almost everybody to panic, right? Every amateur panics at a break of market structure the first time around. And you almost never see the market break market structure the first time around and that be it, right? So you have to understand sort of what's taking place at that level, why that occurs, why it's, great opportunity for you to get on the other side of it, right? Because there's so many people getting trapped through the level. And that's all it is, right? It's a level that you're defining based on TA. If you're using Fibonacci retracements, there are algos, right? Very primitive algos that use Fibonacci levels. But I mean, I don't think any real sophisticated quant trader is using Fibonacci. It's that people are looking at Fibonacci, and that's where they're looking to get involved. And that's where your chances of identifying behavior that's either, strong or weak are best focused on, rather than looking at a chart and having no idea where to look. So adding indicators, having an idea of understanding of technical analysis, other than being able just to describe trends or describing conditions, at least helps you identify, hey, maybe where's the best place to start, right? Where's the best place to get involved? Because most people have trouble trading because they always want to be in position. Do you think price is going to go up or going to go down? Okay, I think it's going to go up. All right, so should I just be in position? No, not necessarily. You should identify the best possible area to get in position that also invalidates your trade, because at least you could define risk very tightly there. So anyway, hopefully it all made sense in terms of BTC. We have, as far as like local setups go, more intraday setups, we have how many hours left in the day? We got almost a full day left, or at least a half a day left. You have an inside day possibly in the making. That just further affirms, like, let's say that this day closes out like this day inside of this day, you have almost complete value overlap. POC rose higher, right? But, at this point, after this is compressed, you're going to have a pretty even distribution, I'd say. So if this is today's high and this is today's low, and imagine we finish it out like that, yada, 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 that would be, is that the same spot? Yeah, it'd be right around there. Yes. Okay. So I didn't know if my drawing tools were going to move. So let me just reopen that and then put those back. So high, low. It's probably not going to be the case we're going to close out like this, but just looking for another intraday trigger to add to that original trade setup. So we close out today like this. Here's your inside day break. I think that if you're pressing that high again, like I said, this is high time from resistance, but if you have another day, if we finish the day out balanced like this, and then we're pressing above 20,400, maybe you see behavior that allows you to get in early for a break, right? And then at least your trade is from, you do have an opportunity from 20,350 to around 20,550. Downside play also, break of the inside day would be right around 19,007. Like I said, 19,006 is the level I'm looking at, but things might get slippery off of that break alone, and then maybe you just start again, like I said, trading in the direction down back within the low, back towards the low of the range. Just mindful that this naked POC probably gives you some kind of response around 19.2. High time frame wise, I don't know what to make of this. We're looking at don't imagine, actually do this. Equal highs right here, right? But we've had a 1 billion contract increase in positioning. So looking at how much open interest has gone up into this level. Now, 9 times out of 10, this kind of positioning is a trap. So you'll see that it's just try to make it as simple as possible. Price has come back up to this level. Still hasn't broken through the level, but this time around, you have a lot more participation behind the move. So the only way you could rationalize being really bullish about this, there's a couple ways you could look at it. You could look at this as overall the macro changing from here to here, and now this being a sign that positioning is coming back into the market that's longer term. All right. You'd have to make a case for that being really strong in the spot market too, as it wouldn't just be crowding into derivatives. Or that all of this is still holding short, right? That whoever got filled in the limits on the way up is short, and that they're going to get squeezed out. Now, I don't know if it's really clear from a basis and positioning standpoint. If you look at funding, predictive funding, and we just look at, this should always be like this. I don't know why it shifts. I look at Bybit, FTX, and Binance. If you look at all these individually even, you're positive across the board. So, Bybit is one exception. But chances are you see those squeezed out, and it's not going to take price to new price discovery. But from a positioning standpoint, I don't really see that a ton of people are fading this. Looking at CVD, maybe for similar signs, you do have a CVD divergence that's not favorable that took place up here. Now, that's not like the most significant divergence. It's just relatively flat. So we're looking at price had made slightly lower high in this case. But CVD is kind of flat. Locally within the structure, if you went by, let's say, this high, CVD went up slightly. No, that's open interest, excuse me. CVD went up slightly. Nothing really that's that material. Like, you want to see something very obvious, right? So I would be way more gung-ho about thinking that this is an absolute fade and, hammering it on the short side if CVD was this and price, was flat. Whereas like CVD is kind of flat, price is kind of flat. Spot CVD though, selling off much more aggressively. So taking profit at that level makes sense. One thing that is, cause for, I guess, uncertainty, as everything is in trading, is that there's a big pickup in spot CVD off of this pivot. So yeah, I don't want to be, I'm hedged, right? Because I just think it's a good level to hedge. And I just think that it's best to operate with this kind of practice in these conditions because it has been the case that anything goes. So when you're actually looking at this chart, it's really straightforward how being hedged is not really even a bad idea because my level to change my bias is right here. So this is where people have trouble. They want to just be involved from the beginning of the move, which is really fucking dumb. Like you have to be willing to capture. If I'm looking at a move from 20,002, you have to be in the mindset that you're willing to capture the move if you arrive to it late even, and it's still relatively close to the entry point. So if my criteria is 20,004, we're at 20,650, or my criteria is 20,005, 20,006, and let's say we're at 20,008, and we're still strong in the direction of this gap, I still have to be willing to place risk, knowing that now that we're back above this level, 9 times out of 10, we're just going to close the rest of that gap. So after that, it's just having conviction, but you can't be in this mindset that you just have to be in the move from the beginning, which is what caused a lot of people to buy this, thinking this, when really we're still looking at just this from here to here. So I'd rather wait for 20,005, 20,006, and it's never a precise level. So you might hear me say, oh, dude, he said 20,006. Why is he saying 20,005 and 2006 interchangeably? It's because that's just the level that I'm looking for the activity. Same thing happened when I talked about in the stream. If you look at the stream notes that 17 Bidding provided, and shout out to him, in the video or in the stream summary, he correctly wrote, 19,006 to look for the behavior. So here's 19.6. And that was for this move, right, where I talked about covering between 19.6 and 20,002. But during the stream, I'm going back and forth saying 19,005, 19,006, because it was a level to look forward to see behavior that buyers were staying aggressive, that it was remaining bid, and that this wasn't just a fake out. So it's a general region to start paying attention. This all makes sense? Everyone's following along? Yeah, so I would absolutely be watching the flow at that point. It's identifying a level to start paying attention to look for that behavior. Sometime, depending on how long price is moving sideways, you have to be willing to get involved a lot sooner than others, obviously. So in this case, just looking at BTC, and it's been kind of tapping at this level, that 20,006, 20,005 region, it might get slippery fast there. So I try to do a good job of like drawing. I always do a terrible drawing job, but I've talked about retests before, where sometimes at a level you actually get a retest like this, where you have the lows put in early on, you get a sweep, and then you get a move that's more bricked out, more squared out. And that's good, right? If you have here's a level and price moves above the level, you sweep that low, it looks like it's going to break back down, you trap sellers here, and then you're basing out higher and you're holding previous levels within that local structure that say, hey, buyers are way more urgent. Sometimes when the level is really significant, you've had a bunch of pent up energy. And think the more significant the level is, the more eyes are on it, the more urgency is going to be around it. Sometimes you just get a move that pops above and really just gives you kind of an ugly flag that's drifting slightly upwards. And you have to be willing to say at this point, like, all right, so this is the level we're kind of looking at. It's really early though. Like maybe this retest 2 days from now, but there might be a bulk of this move that takes place in the next 4 hours. And maybe you just get this like 20-minute shuffle above the level. So this is, a lot of times, like when the level is just, I identify the level and then I'm looking at the behavior and flow at that level. So it might mean, for example, and I shared, a couple streams back, there were really good examples of this. It might mean that we just break above and that we have some kind of low time frame flag. And let's say it's just, imagine that this is the structure, buyers pulling it up, right? This is all taking place in a couple minutes. And then this kind of selling behavior takes place again, slightly higher. And then I'm looking at this and I'm thinking, all right, this is probably a little squeeze, a little flag in the making. I see now that there has been a local shift. So you had sellers bring this down initially after the first spike up. All right. And now suddenly in this transition where selling, let's say of equal value, brought us this much down, Now we're even locally higher. Imagine you have the same amount of selling coming in, but now price is remaining bid above a prior level where, it was slightly slippery. And this is all taking place in a span of, you might see this take place in a span of 20 minutes. And then it's like, all right, you have to be willing to pull the trigger. Listen, what is trading? It's acting on incomplete information and in uncertainty or with uncertainty. So yeah, the level is there for me, and this is why, sometimes you could spend a lot of your time actually not even trading, because until you're at your levels or around your levels, you have to wait, right? And right now we're kind of in a dead space where I wait because we're not at an extreme retesting this excess. It's better positioning now because we're above this POC and this is not as top heavy, right? You could make this being more of a, right? So let me just clarify something real quick. This open interest that I was just referencing, this is okay if price is staying above the level, right? No one's in trouble as long as price is bid above the level. So when you have a bunch of volume come in, and this is where you might want to use like an anchor VWAP or a VWAP from the break. When you have a level where a bunch of volume has come in, you want to see that you're holding the average of that positioning. So if you're trading well below it, well, you know that you're in trouble, right? Especially if this has not begun to move down. Sometimes that's a good indication that you're still early to potentially a much larger short because they haven't even unwound yet. And they're still, they're just underwater, kind of waiting for price to possibly recover. But as long as we're above this positioning, right? So all this position that came in, as long as we're like at the 90, we're at the top 10% of that, then there's really no cause for alarm. You'd have to imagine that on the way up, people were fading this too. It's not just market makers turning over positions. You very well might have people that have passively sold a significant portion of this that are still looking at us kind of being in the center of this distribution. And while longs are good up here, shorts are good up here, we're still around here. They're thinking, all right, maybe this is still, this is still valid. And that kind of makes sense because we haven't even tested this high yet. So very well, you could still have a bunch of sellers that are in position. They're, happy to get involved on the way up passively, providing liquidity. And now their stops are up here. And then it puts us in a position where if we're above, this kind of leads into the idea of you might get really no retest initially and have to buy something that's slippery. Then if we're above 20,600, then we start seeing a big squeeze come in. And one thing that I would be keen to is if we do get a move above that level, and this is where you should be alarmed if you're short. If we get a move above 20,000, or imagine we start approaching this level and you see that liquidations are starting to come in, short liquidations, and the open interest is beginning to go down on the move up, I would be careful. I would probably get out of the way. If I was short here, I'd start reassessing my position. Just going to look through the chat and also just take a look at the ES. So the S&P is in like the same exact spot, right? It's doing the same thing BTC is doing. If you look at BTC's TPO, if you look at the ES's TPO, relatively the same. I mean, you had a big stop run here. Once this low was taken, once that 37,058 level was taken, that was a pretty significant stop run. And if you just want to look at where that was, that's right around the break of this low, back within this structure. And you had a bunch of positioning puke. You could see all these contracts sold. Or you can't see that because it's off screen. One sec. Let me move this down a little bit. There you go. What was I going to do? I'm going to go into alts in a second. But I guess it's probably good to just look at the ES real quick because it is the reason why we're doing almost everything. or rather we're following it, and rates are the reason why it's doing everything. I actually have some levels drawn out already. So let me just go to that. And then I'm going to go to alts. So this is actually a really nice retest. If this continues to move up, Bitcoin continues to move up, right? This is the next target for this is, I think, right around 38.8. It's kind of just like mid-range, the level I've been talking about for a long time when we were up here, the level we talked about when we were on our way down. This is a multi-week composite. It's a weekly level composite in this sense. So if we're going to break back outside of this range, this is the level to overtake. I mean, shit, if the S&P is above 39, if it's holding that level, you're looking at this low volume region around 40,000, 70. But ultimately, there's a case for a big W bottom forming, right? And you're just playing the range. This is a really, it sounds like, it might sound overly simplistic, but the S&P is trading really technically. It's not that you could trade it with just pure TA and, make $1 billion, but it's that at least it's trading clean. So it's relatively accommodating when it comes to defining positioning and defining, what change leads to what. How it takes that path. Trading is difficult not because trading is difficult. Even though you might know something's moving from here to here, you don't know if it's going to move like this or if it's going to move like this. Right? So that makes all the difference. So in general, when we retake a level, I want to trade in the direction of flow, depending on what direction we're coming from. All right, so let's look at some alts. Again, things change during the stream. If we're above 20,005, let's set an alert because I want to be able to grab something during stream. I'll just put an alert on this level right here. That's fine. Okay, so a couple alts. Got Ape, got BNB. Let me get rid of the ES now. Get rid of BTC. Got ETH, FTT, FXS, Link, Matic, Solana, XRP. So heads up, I don't have any positioning in any of these right now. But these are things that I am looking at. And I say that because FXS is a lower cap, but it is something that a lot of people are bullish on. I don't know if I should be bullish on it. I just know that if a lot of people are, I don't want to be the asshole left behind. So at least I'll focus on it. Ape. So looking at, does anyone have any questions real quick? And then I'll go into alts. What did I do? Did I just get rid of ETH? I did. Give me one sec. Did I have it there or did I just put it back? I don't know. Oh, okay. All right. I don't really think the markets are slow, honestly. I think markets are still really tradable. There was a couple days where it got really slow, but it's been way worse. Just looking at the chat. The platform that I was looking at was Coinalyze, which is free. I don't really care about the footprint really for alts. A lot of alts offer momentum trades. I don't think that I have to really get down to that level of granularity. Footprint is not the most important thing also for my trading. I'm leaning more on market profile, market structure, looking at like aggregate order flow. So looking at like the CBD, positioning, whether we're looking at basis, something like funding, putting all these things together. And I look at the footprint, right? There's a lot of the times where the footprint is the last thing I look at before getting into a trade, but it's also, as I've said many times before, it's not the reason why. Like there's many times when I've had a bunch of things line up favorably and haven't got a very clear signal from the footprint and still take the trade. So it's great when you have a really clear signal, but it's not exactly a requirement. Certain setups it is, like certain swing failure setups, first taps through a level, then yeah, I want to definitely see quite a significant change in relative positioning and volume through the level. And a footprint's going to do a better job than anything else with that. Especially when you're looking for one-sided positioning, right? When you're breaking up the bid and the ask and you want to see like, I'm looking for blowout prints, stop run type of spread blowout, and just very one-sided at the bid or at the ask, right? Depending on where we're popping a high or popping a low. But I don't use really footprints for alts. I have looked at it from time to time. I don't have an idea of what the norms are for each individual alt. I know what the norms are in terms of volume behavior for BTC. So I know what stands out, what doesn't, what's like, noise, what signal. I'd be more interested in, for alts, looking at CVD and looking at open interest. So all right. So, and I honestly think, as I said, alts are really good momentum trade opportunities. And when they clear level and there's a change in market structure, I don't think you want to micromanage it too much, depending on what condition BTC is in and where the rest of the market is. Obviously, markets are sensitive right now. If we're sitting on a cliff, if the S&P is looking a little bit shaky, that's different. But a lot of times when alts reclaim a level, it's to the next level we go. And that sounds stupid, but it's been a matter of being able to put a position on, right, that is cost effective, that you're not slipping around on, and having the overall market momentum with you. Anyway, Ape. So I have this weekly, daily first on the left, and just some levels marked out because I'm still intraday trading these. So I think, when there's major changes in market structure, they do offer longer term swing trades. But I still think you could trade these the same way you're trading BTC with profile, from like one sticky point to the next. On the left, the weekly chart real quick. You can see what we've been doing the last 1, 2, 3, 4, 5, 6 weeks, basically no real new structure. I mean, 1, 2, 3, 4. It's not inside weeks from a range standpoint, but it is inside weeks in that we are not able to close outside of, this 580 to 462 level. So there's a bunch of compression that's forming right there. It's forming at the tip in market structure like that. And if you're just looking at overall and you're encapsulating this with some kind of running diagonals, it's just very clear that this is compressing. And the point is that when it comes to a pair like Ape, especially, because I still think there's a lot of juice that is, I think there are things that came out, they had poor timing, right? I don't think there's a ton of bag holders in Ape like there are maybe in other pairs. So, and I could be completely wrong, but I do think that there is room for short-term trends as long as the rest of the market stays, relatively stable, for some big moves within pairs that are relatively new. So it's like Synapse put in really big moves. FXS has been able to do this. Maple. I'm trying to think of things that I've been sharing that are kind of new, but they don't have a ton of overweight, or overhang. And this is compressing. So if this changes and we are suddenly breaking outside of this $6 level, right, whether it's to the upside or the downside and outside this diagonal, I think that you're probably going to have kind of a rush to effect. And you're at least going to see, I would say, this high. So decent moves ahead in terms of swingable opportunities, but then getting down to and again, this is just a weekly, it's not a inside structure, from a range standpoint, from a high to low, but just look at all the weeks. That's any kind of compression in market structure like that, where you have back to back to back week structure or even daily structure. It's balanced, right? And it's not hard to see this one either, that it's really balanced and it's tightening. It's coming to a point. So it's compressing. Compression leads to expansion. A big move outside of this, a retest of the level, probably a really good opportunity to get behind, at least for the first leg. I think these levels though are really significant on the low time frame as well, which is where a ton of intraday trades can be taken. So if you just look at, this is the this is the daily. Why is this not showing up? One sec. Where's the drawings? Sync in layout. Let me redo these drawings so they pop up on this chart. There we go. And then, one sec. Because I just want to know also where these levels are from an intraday standpoint as well. So here is, I mean, this is, we're looking at a 4-hour, but 30-minute chart. And this is, you know, this is your profile. This is your volume profile. I think that at this point, if we're able to reclaim something like 535, and we're putting in this kind of balance down here, 535, I think you're looking at retesting last week's open. Just because we've been bracketed within this kind of structure. You have this kind of tight formation forming. You have kind of a range that broke down into another range. So you're probably looking at something where we break above 535. You have an initial target of, you know, something like 550. But I think that we're ultimately just looking back at that prior last week's open. And again, this box is just from this right here. So this is compressing a lot, where I'd rather get involved on something that's outside of this range, because I think that it's going to offer a good amount of certainty behind the move. So if we break below 469, I would look to trade in the direction of like 385. And chances are, if this breaks down, other things are breaking down too, right? BNB, looking at the weekly, I mean, that's really clear, right? So we have this running diagonal. From a horizontal standpoint, and BNB is probably one of the strongest pairs in the market in the last few years. From a horizontal standpoint, this 324, 325 level has been our pivotal SR flip. So throughout the duration of the structure, this is multi-month, multi-quarter structure. These lows, you can see back here is a good amount of congestion in that region. This is where our first pivot was on the breakdown. This is where our first retest is. There's a bunch of confluence around this 325 level. So it's back in the underside of the structure. Again, this is a really high time frame chart. This is a weekly chart. So this is my point is, this is a really high time frame structure. This is going on 2 years. There's a bunch of confluence around this, because at this point we'd be breaking outside of this running diagonal as well. So progress downward had stopped. This kind of looks like the beginning of BTC, honestly. Weirdly enough, you look at the beginning of BTC, like 13, 14, 15. This kind of, maybe it's putting in some kind of longer term bottom structure here, but I think BNB has much higher to go in further cycles, because it's just so reliable, and anything CZ's part of and Binance is part of, I think has legs in this market, and it's been strong against every single pair. Like, it's held up tremendously. Daily, just to see where we match up. Motion detected at front door. Broken outside of this little running diagonal. Nice little trending move up at resistance, though. I think that being that this larger long-term running diagonal is here, I think if you break up above this 300 point, that you have 2 points of confluence, at least from a market structure standpoint, from much further back, right? And then locally, that this leads us up to that retest, right? So the high time frame retest that's right around 320, 325. Daily wise, like intraday wise, doing the same thing that ETH and BTC are doing. So multi-period balance, move up. Now we have kind of an inside last 2 days. A break outside of the, this 2-day range kind of sets up the same 20,500 level play, where if we break up above here, I think that this has legs to around 320. You have this confluence. You have inside value balance after this strong move up. and it's going to do what BTC does. So if Bitcoin's moving, this is probably just good beta to be a part of. And if anything, that's a lot of times what you're doing. You're trying to find what is the strongest pairs to play the same trade. So we have 6 hours left in the day. If this day forms like this, I think your trigger is honestly, while it's an inside day, I think you have a clean trigger above like 296. 296, we'll say 299 for a much larger expansion upward. I mean, looking at the daily right here, you can see how this kind of lines up. So expansion through this little low volume region, right around 320, 325. And then if you're able to reclaim that, then we'll start looking for much longer plays. FTT. The wannabe BNB, because it's not as significant as BNB in terms of what it, the benefit of owning it. Nevertheless, part of SAM, but I don't think it's a real play on SAM. I don't think that Sam Bankman-Fried, I don't think he really cares about the success of FTT. I'd say that Solana is probably more of a play on SAM than anything else. And that hasn't meant much recently anyway. Everyone's been suffering. But this has the same kind of very obvious running diagonal. In terms of our daily market structure, same situation that BTC is in. Like if you look at this and then you look at BTC, the daily chart, locally it's the same kind of setup. Is this a higher time frame bottoming structure? Who knows? That's your weekly level that we've reclaimed though. So, on the way down, this was possibly a higher low right here, but we made a lower low. So possibly a higher low forming above 25, or that would be what you would want to see. Or it's slightly under 25. It's like 24.3. Just looking at some momentum oscillators. Never really got oversold on the daily. I mean, you go all the way back here, it was. But nevertheless, like I said, it's got the same kind of setup that Bitcoin does. So you'd have to look at this against BTC and ETH, though, to see if you really would want to play this. I just share it because I know that a lot of people are interested in it. But if we're able to flip this little level, again, what is that? Right around 25, 25, 30, 25. I think that you're probably at least looking at a move to 26, test sort of this running diagonal and clean this gap up, which is the same kind of situation of BTC, right? Where it's not a move to the high necessarily, but if we look at this on the broken down a bit more, just put on hourly. It's a, we have a, what's it called? We have a naked POC around 26.83. And then kind of an untested area all the way up to 29. But being that we're in a downtrend and a bear market, we can't just say like every high is going to be retested, right? So, untested region, right? And we're looking at what looks like a big gap in the way of it. Why wouldn't we just kind of move all the way up to that high and take this high? We haven't been taking every high, right? We've been on the way down. We've been doing this. So I think it's silly to assume that we have to throw back all the way to the highs. That's why, in my opinion, it's always better to take this trade, close this out, and then if we're doing something above there, then it's a completely different trade. When you're trading, this is what you're doing. You're looking at, if this is the market, forget the whole trend. You're looking at opportunities that exist like this. And you're happy if you could get these opportunities all over the place, right? Just little portions of the market. Now, the bigger the better, obviously, but you have to be willing to understand that, or you have to be willing to accept that you can't be part of the entire thing. You start obsessing about that, then you're going to set yourself up for failure, in my opinion. FXS, this is thin, so I'm not in this, Scout's Honor, not in this, but it is something that I'm keeping an eye on. And it's something that I've considered like dollar cost averaging back in. If we're going to start reclaiming higher time frame market structure across the board, because maybe this is some kind of W bottom that we're putting in. I mean, if we had a spike and take of that and reacceptance, that'd be great. But I don't know. I swear that it's stupid, but people that have been hitting fundamentally, things that have been maintaining strength, they're bullish on this. So, and I know saying fundamentals is really funny in crypto because it's kind of a joke, but the local market structure I think is pretty clean. So if we're above 560, we're looking at just a very clean range between $8 and $4.
Motion detected at front door.
My wife must be going in and out of the house. I don't know if I think I wanted to talk about how FXS is something I possibly will start dollar cost averaging into, because it's not something I ever really say about alts, right? Unless the conditions are maybe favorable as a whole. It relies on BTC and ETH though, which rely on the S&P. Link, I don't know why I had this. Still has the same consolidation from last stream. I mean, if you look at Link and you look at Ape, I've just done the same thing. Market's done the same thing, right? It's compressing. The benefit of compression is you don't have to be biased. When you're compressing so tight and you have multiple structures inside, it's sort of like looking at a TPO chart and seeing that you have a bunch of value overlap, and the market has been really accepting in this region. Any kind of change in behavior outside of that isn't very swiftly rejected signifies that there's a change in behavior overall. So if Link and if Ape start accepting outside of, if it's Link and it's 805 or it's below 7, then that's a change we haven't been able to do for any time in the last month and a half. So change after a long period of buildup usually going to lead to some kind of follow through. But again, this is like intraday setups, same situation I think as all the pairs it's very correlated to. So BTC and ETH, where you have, I think Link is probably weaker. I don't know. I don't have a Link BTC chart up, but you have this kind of 2-day flag. But I wouldn't take for granted the weekly level at 803. So, maybe there's an intraday play from 783 up to 805, maybe overthrow, and then at that point, honestly, that's your weekly level. So weekly close, the daily close for that is significant, but more locally on the daily. $790. What we've done is really just imbalance move down, bounce, imbalance trend down, accepted back within this prior value. So it was like a 2-day composite. So a change above 790, that's like an under over. And again, we're all, it's no surprise. Everything kind of looks the same. Like if you're looking at FTT and the gap that's ahead of it, and then you have, Link and there's a gap ahead of it, but it's a smaller gap, right? Because price action is different between them. But Matic. So hopefully you guys are able to take one of those trades from the last stream. Matic was one of them. Matic setup was 80 cents. Matic setup was 80 cents to I think 86 or 85. You have to watch the stream. I can't recall. But we do have this running diagonal that's standing out to me. Hold on. That's your weekly. So weekly higher time frame market structure is trending down, right? Locally. Lower low, lower low, lower high, lower high. High, lower high. Not hasn't been completed yet, but we have lower lows, lower highs. It's a flag off of this primary move, right? But if anything, you want to see a change where the market is able to reclaim one of these weekly levels or shift or put in a slightly higher high. But the daily setup, right? Because if you look at this, we do have an attractive shift. I went over this during the last stream between this transition. Flag down, broke down. Then you have this big under over that's holding the top side of that structure. But I would still look at this and say there's much more to be done, right? You have a kind of like through the entirety of this structure, we're kind of tapping at a very obvious resistance. I mean, there's a bunch of dispersion, but no matter where you cut it, you're going to want to require more from price than just a little. So pretty significant, I think, resistance ahead of us. And you could cut it multiple ways, like I said, which is never really in your favor because it just means this whole area is sticky. But locally, the intraday trade that was shared was right here. So we had a really nice consolidation. Looking at this on the 30-minute chart. Really clean highs. And this was your break and acceptance. And the first target was, I think it was like right around this high, so maybe the first target was 85 or 83, or it was overshot. I think I said 85. But you're looking at a move that was, over 3%, 4%, 5%. Low time frame wise, just to give you an idea of what acceptance looked like. Here's your trending move. Sold, right? Sweep that low and then put in a slightly higher low above the previous. So I always talk about a shift in market structure. So if you're looking at this on the 15 or the 5, I mean, if you were looking at a footprint, right? If this was BTC, it would be the case where you have a low initially put in, you break it, trap shorts, and then you're able to make a higher low above previous lows where sellers came in. So, you could go off of this transition right here and place your stop, or you could look at this entire structure as a trigger in and of itself and then play the break. So this level held, so 80 held, and then you're waiting for something like this, some kind of move like that. And then you ended up getting, complete return back to the level either way to test you, pretty much. I mean, right here. But you just have to be willing to swing at it, right? You're not going to have... One thing that you have to get used to, obviously, is that almost all the time, unless you have a perfect entry, and you're almost never going to get a perfect entry, you almost always have to operate with the assumption that wherever you enter, price is going to return back to there at least once and test your positioning. But I mean, the way I look at Matic right now, decent breakout of what looks like the last 2-day value. Matic actually looks kind of strong, right? I mean, we're testing the top side of that running diagonal. I mean, if we're looking at high time frame targets next, if this level is going to hold, not really. I wouldn't want to buy it after this kind of extension. I mean, let's put on some daily levels here. You have a daily high right ahead of us around 92. I mean, ultimately, you want to see that this holds, this pivot. So maybe you get a complete retest of that 80 level. And then some kind of break back outside, sometime a daily close back outside of this move is something worth buying to that high. I just wouldn't buy this thinking it's taking us right there. And then an entire transition. See how this kind of lines up. These lows, this loss retest, fought, broke out. An entire transition overall that is able to hold this from left to right and then possibly put in a higher low here. Depending on the strength of the rest of the market, then maybe you're looking at a longer term swing that you could comfortably hold to this $1 level. And then, if it's near $1, it's going over $1 because you have that sort of 100 roll effect. Nothing stops at $1. It always overthrows. Solana. I believe Solana is, they're all kind of putting in a really, the benefit of like market structure like this on the weekly. I don't know how many times I just said really before that. I think I said really, is again, compression. Really cleanly defined, unable to close outside of this for 1, 2, 3, 4, 5, 6 weeks. And if you're looking at this on the weekly structure, it looks like there's not really much in the way of us on a break and close through 36 back to this range high around 44. And Solana, I think, has the strength to put in those larger moves where you could just bet on that, where you could just say, all right, we have a running diagonal here broken outside, and then imagine that we have this kind of bottom put in, rounded bottom, and now we're holding 35. I'm confident that this is not just going to tap 39. I'm confident that this is going to take some time, but take us back up to the range high. Because this is so clean that when this resolves and people have to, are forced to close out of position, and when people enter based on this change, this should have a good amount of follow through. And again, this is all contingent though on the remainder of the market. This is same. They're all the same right now. I mean, look at ETH, look at BTC. They're all at the next area of kind of high time frame resistance, right? This is the daily. This has been resistance for the last, look how many times we've wicked off of this area, the supply region. So if change is going to occur, it's got to occur right here. So being long into that level, I think, it has to be, you have to be intraday focused. And that might mean, like, again, I didn't want to take the trade in BTC, so I'm not going to take it in Solana, where buying here, rather, I bought down here in BTC, in this retest this morning. But if Solana ends up breaking above and holding yesterday's highs and today's highs, then yeah, maybe you could target the 35 level. So something like that for an intraday trade, right? I think that it should go without saying that the failure of all these moves, not all of them, but if we have like catastrophic failure of all these breakouts, that they're positioned, if they're at range extremes, like let's look at, alts are so tight right now that it's dangerous anyway, taking in a kind of high time frame short bias. But let me go back to BTC. Like, let's say Bitcoin was to wick into this 20,005, 20,006 plus region, but then fall back within today's range. Well, then I think that kind of failure implies that those alts are going to fail too. And the closer you are to those invalidations and to where those next trades begin, the better off you are possibly to get on the short side too. So if you do have a push up and it fails around these levels, then I would equally be open to the short side. It just seems like right now the market has a little bit of long momentum. So XRP, this is nice. It's unfortunate I put this last because a good amount of this is actually taking place. Or if I did the stream earlier, because I drew this morning. In this gap still hasn't come to the top of this target. We talked about this in a prior stream. Right around 60, I guess. Yeah. So we kind of came up there, but I don't know. This possibly has some more legs to go. And I say that because there is a nice flag being put in. Bunch of volatility, right? But you do have, it's possibly the first close outside of this. Significant close outside of this diagonal. So some momentum behind this. Have broken out of any kind of extremes that have governed it. So this should be here. But ideally, there's been many times where you see alts do something like this, though. It looks like a flag. This looks like the break. And then this fails. And you've had that back here. You've had that back here. You've had that many times before where even you've had a flag, broke up, and then, you just have to really look for that hold above the level. But if this breaks down from here, let's say XRP taps this high, meant to be an X. Let's say we get this squeeze up here and then falls back within this range. So let me put the daily on because I think it's actually would be kind of clean. Get rid of these. Let's say we get some kind of forced move here and then we get a daily close back. I think you could just short this, probably targeting these lows again, or at least mid-range. So that's like 50. So that's if we squeeze up this level and you see that shit just kind of falls on lack of momentum. The interesting thing with BTC right now is, and ETH last but not least. Actually, just give me a second. I have to hit the head real quick. Hopefully most of you know what that means. Okay. One sec. So, sorry about that. What nature calls. I actually also just got some pistachios because I love me some pistachios. These are cheating though. Not doing the work for these. These are pre-peeled. Okay. Let me give you guys a second in the chat. Ask any questions. What was I saying? That I'll go back over the ETH chart in a second because it is really clean looking right now. I mean, this is the daily. Showing signs of strength against BTC again. The weekly is not, it's not like there's anything special. Maybe higher low being put in, but still lower lows locally. I'm talking about higher low from here. You have to really be optimistic to start talking about a possible higher time from higher low when you're locally still having trouble. But on the daily, this level really doing its job. And I had referenced this level numerous times. You know, I talked about a stream or two ago that I wasn't confident in this level because the initial response is what you would want and then leave on, right? Normally you would want to see, you know, it's sort of like what you had here. You got the big engulfing candle. You know, engulfing candle means fuck all your progress prior. So big engulfing candle of multi-day structure. And then quickly, this is remaining bid outside of this for the days that follow. This is not a engulfing candle, but it's a really strong response. And then you're kind of like limp within it, the entire structure. So, you know, this is a daily chart. Didn't look that compelling. But nevertheless, it was at a level that I just wasn't going to be able to sell. You know, why would I sell it? Well, maybe because it's in the direction of the current trend. Maybe this is the target, but it's just like trying to push my way through a wall instead of finding a door. So if we were back below this 1250 level, okay, then this consolidation, this failure, now we're probably going to see a puke of this positioning. Anyone who got involved on the assumption this was an SR flip. And we were rolling off, right? So test and then rolling off right here. It looked ugly. Ugliness that's reclaimed, I mean, tells a completely different story because now you have to imagine any positioning that got involved here. I don't think like we've seen that, you know, if you have sellers here, price is still right there. You probably haven't seen them squeezed out much. So if you're starting to push back in the opposite direction, and now we have a multi-day, again, let's just make this cluster really clear. From the highest close to the lowest close after the move, we'll just say that. Now this is kind of an under-over taking place right here. So that on its own, like, the mistake is thinking like, because look, once you look at it on a lower resolution or higher resolution, it becomes clear not much has really changed. Like daily closes are one thing, but when you zoom out, it's like, all right, we're still in the range. We're at the high of the range. Like that's nice. But that being said, this daily level, excuse me one sec, that daily level is that gray box. You know, finding support above there and then seeing that we have intraday strength above where we're rolling off around 1370. And if we're able to base out there, I mean, at minimum tacking the high at 14, and then, you know, there's not, again, this all imply, you know, a move up in this is implying the rest of the market's moving up also. But this is probably a move that, you know, let's imagine that this takes place. You get a push, same thing happening with BTC, holding the top side of this consolidation, and we're going to resolve upward. I'm just looking at the most obvious pivots. So 1490, and honestly, if you look at this entire structure, okay, just making sure it's scaled so you guys can see this profile nice and clean. High volume region. Whoa. One sec. My drawing tool is going to be all wonky. There we go. High volume region, low volume area, high volume region. You know, between here and here, probably tapping that high, but the overthrow probably takes you further up. It's probably not, there's probably not much that stands in the way there. You know, this is not exactly a substantial consolidation that would be that sticky. So you have a gap above that too. Gap. It's not a gap necessarily. Like we don't, it's a 4-hour chart. If you look at it on the 30-minute, that's where you find your gaps. So to show you where gaps are right now, there's a slight gap right here. So I'll just draw them. Okay. And then you have, that was cleaned right there. And then a gap, if we're looking at a TPO chart, it would be where no revisit occurred into a 30-minute bar. So then you have a gap all the way up at between 1520 and 1560. So not an area I would want to be long into. I'd rather be looking for shorts, honestly, if we came that far. So that would be the first area that I expect maybe failure to occur. You know, usually you see price move pretty exhaustively into those levels. So imagine that happened. We get through all this, and then you get that spike into that gap. It kind of lines up nicely still with downward progress. So there is some confluence, but all right. Let's see. Just look through the chat. What kind of music is on right now? It's not, I'm not feeling, I really wish that you could just play whatever you wanted. We'd have some Led Zeppelin streams. We would have some Tool streams. Right off the bat, I mean, there's more selling up here than anything. I mean, looking at BTC. Let's go to the 30-minute chart real quick. Usually I have this on either a 1, 3, 5 or some kind of tick. People are already selling this high pretty aggressively. And you can see it in CVD too. One, you made a slightly higher high in CVD right here. You didn't make that initially. I mean, that was a pretty strong move up. It looked like it was going to try to take out today's highs in that one move, which is never something you really want to get right behind. Retested that level. Like I said, I didn't want to be long there, but you could have had a move off of that. holding today's value, so towards the top side of today's range. That's why you're looking at us hanging out above the VWAP1 standard deviation band. I actually keep it on 1.2. It's kind of like dynamic, value area high, value area low. But there's not a whole lot of aggressiveness now after that move. So you had a bunch of buying, a bunch of volume come in. You can see that in this move right here, there's, in terms of ask bid difference, 22 million, 22 million, 20 million. So strong move up, some aggressive selling into that. CVD is, just looking at CVD with relation to price. No major divergence. Just looks like no more buying from this point on. So let's see if you could hold now. What is the here, let me change the screen because we'll go back to Sierra on. Where did Sierra go? Oh no. All right. We'll go back to BTC's yeah. Yeah, I mean, ultimately, out 282. I mean, a small bite is probably a move above. You're probably looking at a move above, like, because today's high and yesterday's value area high, even though yesterday was not really a balanced day. I don't really like to lean too much on the value areas of an imbalanced day. I'd rather lean on the low volume nodes within it. Today's high, so like what is that, 20,003. A move above that probably sets you up at least to take yesterday's high. So a $200, 200-point move, which is not bad, right? So something that is able to hold this little pivot where you see we're having trouble. So let's say that this, here, let me make this a little bit better looking. Let's say it's this little pivot to 20,301. Again, I'm not looking at a precise level. This is not a treasury market where things are trading for the fucking exact point before they change. There's going to be areas where more people get involved, but this is the zone that I would want to see for any kind of quick scalp. And this might be a good trade to take, actually. Let's go to just a 3-minute to show you maybe what kind of trigger criteria. So if we were to put in some kind of lower high, imagine this, and then you see prices moving sideways. Delta is not really doing anything too crazy. It's not like CVD is showing a divergence here at these lows. But if you get some type of expansion after this, right, after moving sideways, it's being sold, but nothing crazy. Break of 20,003 maybe takes you to yesterday's high. I mean, it's kind of flagging on the low time frame, but like this isn't a very attractive flag. I'd rather see that with this kind of flag, it wasn't an SFP of a local level, and we didn't SFP itself already. So what I mean by that is, I would rather have seen that we just had one rejection so far, like this, and then we're flagging, rather than like expansive move up. Oh, all right, shorting this. And then obviously almost all levels get revisited, then the stop run, and now we're breaking down from there. I mean, the selling coming in right now is leading to lower prices. It's not like any of the selling coming in is really being caught and then prices getting walked higher, which is what you would want to see. It's just we're still congested in the same area. So the worst thing would be to see now buying come in. So imagine we start seeing them lift offers and price still stay in this little pocket. Well, then I think that this is the sign that this is gonna, that's that much of the rotation we're getting up. Bryce Doe. Like I think I mentioned it I try to be as clear as possible. I don't always look at the footprint, but I always try to see some kind of absorption. Yeah, I always try to see some kind of absorption. Where I go heavier are where there's really clear signs of one-sidedness or people being caught off sides. So your mouse trap would be a good example of that. But ultimately, you have to have a level that you're going to focus on to look for that behavior to begin with. And then the flip side of that is after seeing some kind of trap or participation through a level, seeing the shift, right? And the other side get aggressive about lifting out of that level or away from that level. I'm currently on the side of a house hammering cedar shingles. Nice, man. I like the cedar shingles. I appreciate manual labor. I think it's good for the soul. I got to be honest with you. Recently, I was part of like a bunch of Discords, and this is maybe going to be too much, but there's a couple Discords that I'm still part of, and there's one really well-known one that I'm still part of, and there's another Telegram. But I got invited to a couple Discords recently, and I was in for like 10 minutes. I'm like, I just can't relate to you people, and I hate to use the term you people, but one, there's a lot of kids in crypto, and this is trailing off like the manual labor conversation, and being good for the soul. I was in these Discords, and I'm realizing like I can't relate to a lot of people, I think, in the crypto market. I'm not trying to set myself aside by any means, but I'm older. I am a bit more old-fashioned. I like old-fashioned shit. And I don't have any kind of like time for noise in my life because of where I am in my life. And like, I have a family, I have a kid coming, I have a wife. I have shit to do around the house. This is how this kind of tails in. But I ended up leaving all these Discords, even though I was just invited to them. So my point was I appreciate when I run into someone who's like doing some real shit. And I think that's like one of the things I hate about crypto is like there's this whininess, and it's because a lot of people in this market are, I don't know, really youthful in their attitudes. And I don't mean like, not every one of them, I mean good youthfulness. I mean like the new youth. And maybe I sound old. I think it's because we're old. I'm starting to sound like, my parents and then my grandparents, where you're like scoffing at kids. But I do think, and it's going to sound like it's going to sound contradictory because like we know that every generation feels this way. I do think, though, I swear that the kids these days are different because they're just in a different environment. I feel like you can't replicate. Like if you're in, I don't know what the age is, honestly. I was born in 1985. I'm 37. But in my childhood, bang on neighbors' doors every day, play hockey, play manhunt, outside, fingers fucking dirty as hell all the time. My parents had a bell in the front of my house, and they rang the bell when it was time for me to come home. Got a cell phone when I was in high school, maybe even middle school, but it was like Nokia 5150. You played Snake. You text your parents to pick you up from after school activities. That was it. I feel like kids these days, I'm just going to go out and say it, they're way more, they're bitches. They're bitches. They're super soft, super whiny, never had to get their hands dirty. They don't know anything about that. So I don't know. I guess I'm going off on a tangent because someone said they fucking put up shingles on their house. But yeah, maybe I am a boomer. But yeah, I've seen a lot of shit, man. I haven't gone into like my entire life by any means. Like big part of my life is completely undoxed to people that follow me on Twitter. I'll get into it. It's not like, it's not anything criminal, but I've had some colorful experiences, and I feel like a lot of people, a lot of kids haven't had them. Anyway, I'm starting to sound too old. I got to finish the stream up. I appreciate you guys hopping in. I hope you make this of some kind of use to your trading. I don't think there's anything else I wanted to go over. Odds are I finished the stream and I realized something that I intended on covering. You guys know that I don't really care too much for alts. So for me to talk about 1, 2, 3, 4, 5, 6, 7, 8, 9 alts is kind of an extension of itself. Oh, last but not least, can't forget. So let's take a look at just BTC as some kind of proxy. Or look at the ES because they're both doing the same thing. Okay, beginning of the quarter, we're up. Listen, first of all, beginning of the quarter, first trading days of the year this week, rebalancing, big days. If anyone's going to swing to try to fix their year, maybe they're going to do it now, beginning of October. That being said, also, another thing to consider, if you done fucked up this year, it's a good time to market against your books, right? To harvest those losses. So there might be, this is kind of like another one of those situations I hate saying where it's like, maybe it goes up, maybe it goes down. Maybe they're buying, maybe they're selling. It's going to be choppy. That's the best way I could put it. Really bad year. There's plenty of people that want to mark losses against their book, cycle into those positions again, reestablish them, use those losses to tax harvest. And that's going to be, manifested through selling pressure in the market. So choppiness, right? But beginning of the month, beginning of the quarter, end of the year, historically a significant month in markets. Historically, crypto has performed well into the end of the year. What was I going to say? I'm losing my train of thought. When you lose your point, but you're like, you try to keep talking to get to it. You're like, I'm going to find it by the time I finish the sentence. You just fucking hope to God you will. Otherwise, you just sound like a moron. No, I'm going to get this one. Fresh positioning in the beginning of the quarter, beginning of the week, right? Beginning of the month, a bunch of things lining up. And it's also non-farm payroll week. So Friday, not as significant. I mean, it's significant. And then CPI next week. So why are we trying to call this from memory? We have NFP this Friday. So that's at 8:30 a.m. And then we have CPI. That's next Thursday. So two very significant dates. Keep an eye on the drift of the market leading into these events. So there's been one of these events more recently. It was the last CPI, right? Where the market was drifting up into it. So no hedging, none of that. And one side was completely caught off guard, right? First trade, as I said, I was sharing this live, didn't work out. Motion detected at front door. Keep an eye on this because if we get into, let's say, there's the pup. What's next Thursday? What date is that? Is that 13th? 13th. If we get to the 13th, why is this? Oh, it's because the timing. It's a 4-hour chart. If we get to CPI and we have done this, we're drifting up. That's dangerous. It doesn't mean we have to go down, but if it's a bad number and we're still, the UN has said you need to stop raising rates, right? Fucking everything up, guys. And daily in the Fed, Fed people have been saying no, we're going to continue to raise rates. So if you have the market that is expecting one thing and they're really leaning on a pivot early and there's a lot more signs lately that there might be, right? It's not that they might. There's a lot of signs that you would normally look at and say, if I'm going to sniff out a possibility of them doing it, if you're going to try to, I think it's a good idea to just play the ball where it is right now. Hey, when they change their mind, there will still be people that are dumb and they continue to trade in the direction of the bear market, right? And that's your chance, right? You still have crypto is a really accommodating market to get into trends even later. You don't have to be there in the first day or two. You could be on vacation, come back a week later, and when the regime changes, just play in the direction of it. But people don't. That's why they lose money. And trends can be really clear and situations can be accommodating and environments can be accommodating. You still have people to lose money. But if the market is long into the event, if we see that the market has been drifting up, if you have a bad number, you have a lot of one-sided positioning into that. I would just be careful of if you have a market drifting up into CPI, even if the number's in line, unless you have a drastic improvement, it's a good chance that people are already pre-positioning. So a bad number with a positively drifting market is just room for concern or reason for concern. And it's probably going to offer a pretty swift move to the downside. So that's something to consider, just the overall positioning. That's under the hypothetical that it's drifting up, right? If we just move sideways to CPI, I'm playing it like it normally is, right? I'm playing the first move mechanically. As long as that trade exists, one, it's a trade that it has limitations. I can't size incredibly. I think my trading size, just to give you guys idea of like my trading size for CPI first moves this entire year has been anywhere from, and I know this maybe sounds casual about a size that still many people are working towards. My trading size for the first trade in CPI has been anywhere from like 150,000 contracts to 800,000 contracts. So yeah, you could play it in excess of that. Everyone can play it less than that. But just the idea, it's a limited trade because it's mechanically based off of the first move of the S&P. I am taking it understanding that it's going to slip. I need to get in before it's already moved 5 basis points. If I don't, you're already fucked because you're paying to mark it in. And I play around with different sizes because I just feel like it's been a trade that's been receding over time. So I've sized down over time. And there's some times where it's just, I'm not that confident. Like you might be wondering, if you normally trade with, let's say your scalp size is, 3-4 times that, then why would you play with a quarter of it? Well, I don't know. Sometimes I'm just not totally confident taking the first trade that's going to be literally just following the S&P. It's a pretty dumb trade. The second trade, so let's say that market's moving flat into CPI, you get a spike up, numbers are negative, numbers are in line. If we get a spike up, usually it's going to be a half hour to an hour. That's going to pull more positioning into the market. If the first move's up, usually the market's going to retrace that move in the hour out. If the first move is down, same thing in the opposite direction. Let's say the market's moving sideways. A good number is printed, even an inline number is printed, more of the same. Market moves down, 30 minutes in, we're moving sideways after moving down. You're probably going to see the market whipsaw to the upside. So for me, CPI is taking advantage of the first trade mechanically, basically looking at the S&P. What direction is it moving instantly? My last FOMC trade, I took 7 seconds earlier before the release. So I shared the trade video. It was a 12, 13 second long trade. I closed out the trade before Quant Tower went down. There was no skill there. Let's just be clear that I got really fucking lucky because I shared the video. I literally closed out. The platform went down. I had my exchange open. I always have it open. I always have a backup. I always have a hardline backup. But I don't know. I think if I think back on that trade right now, if I had to resort to going to the exchange, there's going to be a split second where you're panicking and you're thinking, oh my God, by the time I'm acting on the exchange, who knows if I would have even caught out with, made it out of that with that profit. But needless to say, first trade's mechanical. So I think that was what I was going to finish with. FOMC, I ended up taking that 7 seconds early. So you're going to see at the release, the market's just going to jump in one direction. I'm following that move for at least 150, 200 basis points, right? So 1.5 points, 2 points. Not 2 points, but 1.5%, 2%. Maybe it goes up 3%. I miss out on that because I just try to get out no matter what. But if we start leading into the move, like FOMC, I just saw the market moving. I'm thinking everyone's jumping the gun. I'm going to just jump now too. So maybe I'll do that. If CPI, that's dangerous. I don't know. I got lucky when I did that. I don't know if I want to act on that. I'll probably just play the same. When it releases, I don't know if CPIs we've seen lead ups where last FOMC, 7 seconds prior, don't quote me, go look back on it. Maybe it was 8, maybe it was 6. The market started moving up. So I just figured out what the hell. If it's moving up now and we get something positive, it's going to be it's going to be gone by the time I try to get in. All right. Yeah, a lot of kids with delusional experts. I mean, listen, crypto's one market where it's really easy to make it compared to other markets. But do you take much time to get? No, because so that scalping size that I just mentioned is less than my bull market size by a factor of 2 to 3. So no, it does. I mentioned scaling up in trading. It's something you have to do if you want to grow. At this point in my trading, I could trade the same size, have sort of linear expectations of growth, and I'm fine with that because my size is now quote unquote size. But if you're trying to grow, you have to continually increase your size to compound. Obviously, you want to have trades that are higher probability of occurring favorably than others, so you can lean into them a little bit more, lean on them more. With mechanical setups, you don't want to do too much changing of size because all trades are kind of created equal. If your win rate is 50%, these trades are kind of just like coin flips, and you're just lucky to get out of them when they're wrong right away. You don't want to have trades that are way different from others in terms of size. But obviously, when nuance comes in and when you're better, you'll be able to hopefully pick up on cases where you should go a little bit heavier. Sizing up, though, it's kind of like trial and error. You're going to, unless you're doing it perfectly, like quantitatively, perfect Kelly criterion, whatever method you want to use, you're going to size up too much always and then be like, oh, fuck, that was too much. And then find a sweet spot between your last size. And then you're going to be taking kind of, here is my base level size. I size up a lot. Oh, fuck, take a haircut. Okay, this size is cool. Size up a lot. Oh, fuck, take a haircut. And then stair step your way up. And ideally, maybe you get to a point big enough to where, you realize the capacity of your size, because, you can't trade the 1 second chart anymore if you're moving more than the average volume that takes place on the 5 second chart, right? So, and that's a joke, the 1 second chart. But to give you an idea, right? If you're trading the 1 minute chart and the average volume for, let's say, you've grown tremendously, the average volume for a 1 minute candle is, well, I don't know. What is the average volume for 1 minute candle? 9 million, right? Let's see. Let's reference BTC Perp. Let's look at 1 minute candles. Let's go to 1 second. Let's just add a volume indicator. I just want to make this point, and then we'll finish it up. This is not all for nothing. You'll see what I'm doing in a second. All right, so here is our 1 minute, and then we'll just put on a volume average of, let's just say like the last 20, 50. All right, so, and then we'll just indicate what that value is. Okay, so that value is 68. So a little back of the envelope math. 68. Oh, no, it's not. Why is that? 1 second. What is that? Oh, no. Okay, so it's 596 times. Oh, that's much more on Binance. Excuse me. I'm still thinking in terms of Bybit. So your average 1 hour candle is that correct? Let's see. Yeah. So your average is 597. Maybe it's maybe it's because I'm trying to think of why I had a different idea for that. No. Obviously the average volume is going to change depending on what moving average you use. I mean, if you use higher moving average, it's going to go down. But so anyway, the 1 minute candle volume average for Binance Perps is actually in excess of 20 million. So that's not a good example. I'm thinking in terms of like Bybit. But let's imagine that, you're trading on Bybit and your 1 minute candle size is an average rotation size of 9 million contracts. Then you can't trade, obviously. You can't get close to that, right? You don't want to be close to that necessarily. You could, right? It obviously, this all depends on liquidity and what kind of impact you're going to have. But the point is, like, you're going to be constrained based on your size at some point. I don't know why I felt like I should make this point, because for most people it's going to be unrealistic. You'd have to be trading ridiculous sums to start realizing, for example, the constraints of like a swing trading strategy. So anyway, that's it. Hopefully you guys enjoyed the stream. Make sure you hit the like button, hit the subscribe button, and that'll be a wrap. Price is still where it was when we were talking about it over an hour ago. So that's why I knew. So like I said, just to reiterate, if this had broken earlier, right? If we were in the process of moving down like this without this spike into that low volume region showing weakness, and we instead ended up starting to drift up earlier, then I would have targeted this high, right? Using this diagonal. But the fact that we broke down and it was on some decent selling, and the S&P is dragging down too, or took us down as well. The fact that we broke down and now that we're back above, I'm not looking at this the same. Now I'm saying, all right, we are definitely putting in a larger 2-day range. I'd rather play the extremes. All right, guys, that's it. Have a fantastic week. I will see you again, or just next couple of days. I'll see you again on Friday.